So my name is Shana Gavron, and I am the CEO of Endangered Wildlife. I have a joint finance and conservation background with around 15 years experience as a sell-side institutional equity analyst, but have been working on the solutions for biodiversity finance since 2005. One of the big challenges that I have seen over the many years is there is a lack of common language between the world of finance and the world of conservation. It is this gap that Endangered Wildlife is trying to bridge by converting a complex concept of biodiversity into a common universal language of money. So in saying this, Endangered Wildlife is a consulting and a software development company working on the financial valuation of both species and richness to help to facilitate this process of integrating biodiversity into any form of decision. This is what I plan to address today, looking at a practical case study where biodiversity is directly integrated into a property development financial analysis. You may be thinking though, how is it possible to incorporate biodiversity into financial analysis? Doesn't financial analysis require finance? Well, in part, this is true. Financial analysis does require finance. And based on what we do, it is actually possible to transition biodiversity into finance. By considering the various characteristics of a species or the richness, it's possible to calculate a financial value of biodiversity based on the contribution that biodiversity makes regionally to society, the economy, and the environment. Now, the way we approach this is based on a sum of the parts. Think about it this way. Think of a species as a portfolio with diversified investments. Some portfolios can include carbon investments, some aesthetic investments, economic investments, hedge investments, or impact investments. Each of these on their own will have their own characteristics and values, but they all contribute to the greater portfolio. Some portfolios may be only carbon, others may be only impact, but each portfolio has a value based on the sum of the parts of the portfolio's attributes. The only difference between the species and the portfolio in this analogy is effectively the species is the portfolio, and through its natural activities and mere existence, it is creating an equivalent of a portfolio value. So when we are looking at biodiversity, we are valuing a diversified portfolio of multiple asset classes, taking various risk exposures into account. And as per any portfolio, each segment can be valued based on publicly available information and data. So with this in mind, let's start with what I think everyone here came to see: the practical application of biodiversity within financial analysis. This is not a credit valuation. This is actually integrating biodiversity into the NAV and ROI calculations of a project assessment. In order to do so, we are creating a residential property in Western Norway. While this is not an actual development, the property was actually on the market at the time of the valuation, and the numbers used are based on real Norwegian market averages. The identified property is actually an 11-hectare piece of land with mixed habitat, with forests, woodlands, grasslands, and access to natural waterways. In this scenario, we intend to construct 32 high-end luxury houses of 200 square meters surface area, each on their own land of 1,000 square meters. As a development, we would be responsible to lay all the infrastructure and carry out the landscaping and maintenance of the property. Additionally, the advert of the land mentions the fact that it is rich in biodiversity. And while there is no survey, based on the location and habitat types, it is possible that it may be inhabited or be suitable for Arctic foxes, beavers, lemmings, red deer, and roe deer. This assumption is based on overlaying the distribution maps of each of these species relative to the area in which the property is located, as well as taking into consideration the specific habitat preferences of each of these species. Now, internationally, it is known for a fact that more home buyers are beginning to prioritize eco-friendly homes and sustainable building practices when they look for their new property. Likewise, investors are looking to improve their own ESG profiles when considering the property market investments. So when preparing this 11-hectare property for development, there is an important decision that has to be made. Do we follow the traditional route of clearing the land and prepare landscaped, manicured gardens? Or do you rather keep the natural assets to integrate and promote the presence of biodiversity? Now, this is a vital decision that has to be made, because according to the CBD, changing land use is the most significant factor impacting Norwegian biodiversity and will have a negative impact on 87% of threatened and near threatened species. One of the suggested adaptation strategies is to secure corridors or large habitats with climate gradients and protect already threatened species. However, for many developers, this may be a difficult decision to make. While they are aware of the shifting behavior of buyers, according to the results of a recent study by Green Solus, biodiversity is one of the most complex issues to implement. Market players do not know how to address it in a concrete and pragmatic manner. Moreover, they consider that there is a lack of harmonized approach and guidelines. But at a high level, what is actually known? And something that I will go into more details about is that when you follow the traditional manufactured garden route, you essentially will be displacing the naturally occurring biodiversity as a result of the fundamental changes in the habitat. You'll be incurring landscaping and gardening capex and maintenance costs. And you will be unnecessarily actually increasing the carbon footprint of the development. Now, comparatively, by being able to actually understand how to integrate biodiversity into the development, you do not destroy the habitat and thus are able to retain and encourage biodiversity. You're able to reduce that landscaping and gardening capex and maintenance costs, and thereby actually you're reducing the development's carbon footprint. You can increase the green image of the development and attract a growing eco-conscious home buyers market. And finally, based on the valuation methodology outlined for biodiversity, we can actually calculate a biodiversity NAV and ROI. So suddenly now we have the means of addressing those Green Solus challenge of how to address biodiversity in a concrete and pragmatic manner for developers and even for their investors. In order to do a direct comparison of the two strategic choices, let's shift back to the basics. A traditional method to assess a property development's feasibility and returns is using a DCF model. Thus, this is actually the approach we are going to take in this case study. Now, a little bit of background, the Norwegian market has actually taken somewhat of a knock in 2022 on the back of higher interest rates, energy prices, and a weaker economy. However, due to limited supply of residential properties in the market, housing prices are slowly beginning to rise again in 2023. Additionally, due to government easing the borrowing requirements, more investors have actually started to move into the market. Under the new requirements, for example, from the 1st of January 2023, it's possible to buy homes with less capital upfront. And also, according to the CBRE, ESG, in fact, has become the new norm of the Baltics. 75% of investors have already adopted ESG criteria within their decision-making process. So it's therefore believed that the focus on sustainability issues will only intensify in 2023 and beyond. Keeping that in mind, we've made the assumption that we will purchase a piece of this 11-hectare piece of land, and we will break ground and initiate the construction of the houses and the infrastructure in 2024, with the first completed houses available for sale in the market being sold in 2025. Although the development will be marketed as exclusive, considering the location and the market conditions, it's assumed that there will be a gradual uptake of the houses, but the development will be sold out by 2030. Now, these base assumptions remain consistent for both the traditional and the biodiversity scenarios. However, the traditional development requires increased landscaping design and implementation, along with more active gardening maintenance services. Based on these assumptions, it is estimated that under the traditional land clearing scenario, there will be a cumulative net profit for the development of 8.1 million euros and an NAV for the development of 1.1 million. But, and this is where things become quite interesting, a development that aims to be green should not only be looking at financial prospects, because in maintaining an immaculate manicured garden, there are other factors that need to be considered. For example, the equipment and supplies required for maintaining the gardens. So let's have a look at some of these features. Let's start with lawns. Perhaps we do not intend to apply chemicals, but nobody wants to see a landscaped lawn with weeds, what they consider to be weeds, in which case a certain amount of chemicals would be required. Now, on average, chemicals for lawns produce about 135 kilograms of CO2 equivalent per year per acre. Then, of course, we need to add irrigation. And besides all the water consumption required to ensure that the grass stays a lovely rich green, irrigation produces 231 kilograms of CO2 equivalent per acre per year. And of course, we need to make sure that the lawns are kept at a consistent, neat height. This will produce a further 425 kilograms of CO2 equivalent per acre per year. In fact, using a mower for just 1 hour actually produces 11 times the emissions of driving an average new car for an hour. And then we need to make sure that the planted trees, plants, and beds are also neat, without even starting on petrol hedges, edges, and saws. Let's just look at the leaf blowers. Besides all the health issues and warnings relating to leaf blowers, such as hearing and breathing problems that are caused due to noise and particles being blown into the air, did you know that using a leaf blower for just 1 hour equates to CO2 equivalent emissions of driving a car 1,770 kilometers? That is not something that can easily be ignored. So let's look in comparison at the case for biodiversity. We have the option here to do a richness valuation, since we know, based on the advert, the land is rich in biodiversity. But instead, we chose to focus only on 5 identified individual species. These are species that were all valued by Endangered Wildlife in April 2021, using the methodology on slide 2. As you can see, the baseline valuations that were done do vary quite significantly. However, based on habitat types of the property and the size of the property that can be set aside as a natural habitat garden, it is estimated against average densities per hectare that there would be sufficient land to support 2 Arctic foxes, 1 red deer, 1 roe deer, 4 beavers, and 330 lemmings. Now, the lemmings are particularly important for the Arctic fox, as they are one of the key food sources. So this is why it's so critical to actually understand and recognize how interrelated species are, and need to ensure that there is a balanced and healthy ecosystem in the area. Additionally, these species contribute not only to the healthy ecosystems, but they perform important services for society. Take, for example, beavers. They are well known as being ecosystem engineers, and through the modification and maintenance of the habitats, they are able to create new habitats, for example, for insects, which then in turn become food for fish. And their dams, the beaver dams, help to reduce the pollutants from traveling downstream and thereby actually improve the general water quality. The Arctic fox, though, may raise some eyebrows, considering that it is a predator. However, they are not dangerous to humans unless they deem you as a threat. Naturally, it would be necessary to implement a rabies vaccination protocol for Arctic foxes on the land, but they do not actively hunt humans. Humans can live in harmony with Arctic foxes. And in all cases, it will be explained to residents that they will need to be respectful of all species, both plants and animals, as they are wild, and a distance of several hundred meters should be maintained to avoid any sort of disturbance. So for the biodiversity scenario, coming back to our project plan, we have gone through the same DCF process. As previously stated, we hold the base assumption consistent, where we break the ground and initiate construction of houses and infrastructure in 2024, with the first completed houses available for sale in the market in 2025 and being sold out by 2030. Now, in this scenario, though, while the housing construction, individual garden land, infrastructure clearance, and construction remains unchanged, there is a difference when it comes to the landscape gardens. This is assumed to be approximately halved, leaving around 5 hectares of natural gardens for biodiversity. This means that there is a reduced need not only for landscaping, but also for the gardeners. Instead, you'd require a forest manager, for example, to manage the natural areas. At the same time, natural gardens are able to take care of themselves, which significantly reduces the need for and the negative impact that I've mentioned previously of those gardening equipments. So based on these assumptions, we can now estimate a cumulative net profit not of 8.1 million, but 8.7 million, and an NAV going up to 1.6 million. Now, with all these number crunching completed, we can come to what I believe is the most intriguing slide, the actual comparative analysis between the two scenarios. So as a reminder, the clear land scenario assumes the entire 11 hectares is transformed into a development with landscaped and manicured gardens, whereas the integrate biodiversity scenario assumes that approximately 5 hectares remains untouched nature. Now, let's focus on a few key figures and try to determine what this ultimately implies. Firstly, under both scenarios, we have total sales, which would be worth a cumulative 45.4 million euros, assuming that all the houses are sold between 2025 and 2030. As discussed previously, we saw the net profit under the traditional clear land route being 8.1 million, which is exceeded by the biodiversity scenario by around 600,000 euros due to the reduction in land management related costs. As a result, the biodiversity option starts offering a superior net margin of 19.1%. That's 130 basis points above the clear land net margin. And with all other factors held constant, this means that your NAV is rising, as I said before, from 1.1 million euros to 1.6 million euros by opting for those natural gardens that retain the biodiversity. And this is probably where a normal property development analyst would be able to get to. Even that alone clearly demonstrates the added value of directly integrating biodiversity into a property development and actually retaining those natural assets that already exist. But here's where we can take things one step further by actually placing that biodiversity into the analysis. The valuation of the species effectively equates to an implicit NAV that is created by not displacing the individuals. When a species is displaced, there is a zero biodiversity NAV, as those are no longer there and they're no longer part of the land. The development is no longer supporting them and maintaining them. In comparison, when we leave some land untouched and allow for the symbiotic residence of the land with both humans and species, we are starting to allow the development to retain the biodiversity NAV. We are creating a positive impact by not displacing the species and encouraging the presence of them. We are thereby providing new habitat to the species and contributing towards their sustained survival. Now, this cumulative NAV across the 5 species, based on the estimated densities, is approximately 4.4 million euros. That suddenly means not only can we calculate an ROI for the development, which is already 210 basis points higher for the integrate biodiversity scenario compared to the cleared land scenario, but we can now calculate a biodiversity ROI, which is over 12% when we integrate biodiversity into the development. This is calculated or defined as the biodiversity NAV to the investment made into the development. And then as a final valuation of the project and the 2 scenarios, we consider peer implied market cap of the 2 scenarios, taking some regional listed residential property development peers. Is calculated that the average price to NAV is approximately 0.6 times. Now, when you apply this multiple to the cumulative NAV of the cleared land and a scenario of 1.1 million, the implied market cap value is effectively 0.6 million euros. Comparatively, when it's applied to the integrate biodiversity scenario, the NAV of 5.9 million equates to a market cap value of 3.6 million euros. It can therefore be easily demonstrated that making a simple choice of integrating and using natural assets of a piece of land within a property development can create significant value from a financial perspective. It can reduce costs and increase profit margins for a company, can demonstrate higher returns to investors and to the company. We can retain and enhance the environment. So it is an actionable green policy rather than mere greenwashing or offsetting. And ultimately, we can maximize returns both to shareholders and the environment. Therefore, critical corridors can actually be created, and biodiversity can be directly integrated into that whole financial analysis and can become part of the financial benefit to companies rather than an expense. This is what stakeholders need to begin to recognize. We are all integrated with biodiversity, and as such, biodiversity needs to be recognized as a vital asset to companies and a global and local economic citizen. With that, I will say thank you, and we will try to tackle as many questions as possible.